All right, what's going on, everyone? This is Taylor from Simpler Trading. Let's do a quick recap here on my recent Amazon trades. So my bad for not getting the video up last night. I was pretty freaking exhausted. So coming at you a day late, but for those who've been following along, the Amazon weekly squeeze has really been a focus of mine for the last 4 to 5 to 6 months. So the irony here is that the weekly squeeze still hasn't even fired long, though it's been a pretty profitable endeavor. So for this most recent trade, let's get a look here at the daily chart. So in the options room, we did do a couple of put credit spreads back here in this daily squeeze, along with the squeeze in the SPY and the Qs. That was a pretty profitable move. But for this most recent trade here, we got the pull back towards the 8 EMA. You get the weekly squeeze behind you, stacked moving averages, green 10x bars. So a good pullback to one of the buy zones. And then what I was paying attention to here was the 4-hour squeeze on top of the 8 EMA. So with the power of the potential weekly squeeze behind us, with a pullback on the daily chart to a buy zone, and then on top of the buy zone, a good looking 4-hour squeeze, through the 16th to the 23rd, we started building a couple positions here for a move into earnings, and it's exactly what we got. So the decision to hold through earnings, it's not always an easy one, but it's an easier decision to make if you're using proper position size. So if you got money on the line you're not willing to risk, or willing to lose rather, the wild card of holding through earnings, it can be a little bit stressful. But if you have accepted the risk, it is what it is. So the focus here wasn't necessarily on the P&L. It was more so the structure of the weekly squeeze. Now the only thing I want to kind of cover here is why did we take profits? So before we even talk about Amazon, if we look at the Qs here, this was a big part of the decision to take profits on Amazon. Amazon moves really well when the Qs are moving well. But after this daily squeeze is fired, now we're going through the exhaustion phase. We got a brand new daily squeeze. It is looking like before we make the next leg higher, there could be a little bit of back and forth chop, which I do think there's a couple of trades we can benefit from with the chop. So we'll talk about that in Sunday's video. But that's a big decision as far as taking Amazon off the table. If the Qs were still firing that daily squeeze long, they still had the momentum, maybe you hold on for a little bit more. But the market losing a little bit of steam going into a new squeeze. And then as far as Amazon itself, though the weekly squeeze hasn't fired, and that is the move I'm looking for, if you look at a daily chart and we change account their channels to measure 3 ATR, average true range moves above the 21, you're hitting 3+ ATR the morning after earnings. So the overall market is losing a little bit of steam. We're going into new consolidations. Amazon here opens up with a key extension. And then Facebook, Apple, Microsoft, etc., they're losing some Momo as well. So that was what led to the decision here to take profits on Amazon. And because the weekly squeeze hasn't fired yet, I do think you still got opportunity here. So the Q's got a brand new daily squeeze. Maybe it takes a week or two, but if that does fire long, I think you can see some action here from this Amazon weekly. So something we'll certainly be paying attention to, and I do think a dip to the 8 or even a dip to the 21, it's a good buy spot for Amazon with the weekly squeeze behind you. So took profits after earnings, and that was an interesting morning. So, in the after hours, you get the big 200+ point gap to the upside. So that's awesome stuff. And then we're fading a little bit into the open. So, as you're growing as a trader, you're playing with bigger position sizes. Obviously, with that comes bigger profits. You still got to kind of make that disconnect between the noise and, you can't get caught up in your open P&L. You got to focus on the structure of the setup at hand. So, admittedly, I kind of lost a little bit of sleep, more so from excitement, really than anything. But I'm watching Amazon give it up a little bit there into the open. I'm seeing the Qs are down, 1% into the open. And then the market opens up here. Amazon makes a little bit of a push. It's up, call it about 2% on the day. And that was good enough for my positions to get filled. So what I actually did at the open was I got the orders working to buy back the positions I had. And then I went outside. So went through the tennis ball of the dog just to kind of get myself away from the charts and, let the orders do their thing. So I did get filled on the little pop we had into the open. So for those of you watching on Friday, things opened up a little bit shaky. Amazon did make an attempt at a bounce, positive about 2% on the day, but ultimately things did roll over. But we did take the profits before that took place. So I'll show you a couple different pictures here. All right, so here is, that's not going to work. So here's a screenshot on my Thinkorswim account from Friday morning. So that morning the position brought in, or the positions combined, Brought in about 12,000 bucks of profit on Friday. So all in all here, I'll show you the positions. So here's the one we did in the options room, which you should definitely check out. I think I can help you learn a thing or two, definitely make a little bit of money along the way. But we did in the options room. April 21st, or May 21st expiration rather, 3,500 by 3490 put credit spread. And then on my own, I did a couple more put credit spreads. I also did a debit spread, which the debit spreads are not a strength of mine, definitely something I want to get better at. So that was actually a JC trade. So thank you to JC. But we're building these positions, inside of that 4-hour squeeze with the weekly squeeze behind us. Pretty decent move into earnings, pretty decent move after earnings. Opportunity to take some profits off the table. So between those 4 positions, this is good for about 25,000 bucks. So to answer a couple of questions, usually, if you follow my videos, you see that I tend to do the out the money put credit spreads. And with an out the money put credit spread, you're going to get about a 2-to-1 risk reward ratio. If you go a strike or 2 strikes out the money, in this, this most recent instance here, you got a weekly squeeze in the Qs. You had a really strong market. Amazon's got a weekly squeeze. You're holding the 3rd to 8 EMA with a 4-hour squeeze, heading into earnings. What I wanted to do with this trade is put myself in a position where if Amazon did make a nice move, not only into earnings, but potentially after the announcement, put myself in a position where I can make a pretty outsized return. But at the same time, if Amazon craps the bed after earnings, how can I have a trade that's structured in a fashion where I'm not going to lose my shirt? So, if I'm lining up for a big pitch here, I want to make it a bigger trade, I could do my typical out the money put credit spread and, maybe double up my position size. But with the in the money put credit spreads, and mind you, we're selling 3,500 strikes and we're building that position when Amazon's trading, around 3,300. So by selling the in the money put credit spread with short strikes that are above the current price, that obviously does require Amazon make a move in your favor. Because if Amazon's at 3,300 and you sell puts at 3,250, well, all Amazon has to do is hold above 3,250. So the major difference here is that you're selling in the money options, which it does require a move in your favor, but because of the in the money structure, you're flipping the risk reward around. So typically, I'm going to look for a 2-to-1 risk reward ratio on an out the money put credit spread. With this instance here, with the in the money put credit spread, it was closer to a 1-to-3 risk reward ratio. So on that 3,500 short strike, risking about $7,000 to make 20 plus. So you really put the risk reward in your favor. And though the weekly squeeze didn't fire, and though we never really, held above the short strikes, we did collect enough premium into the earnings announcement to make it a pretty good trade. So, like I mentioned at the beginning of the video, if the market was still pumping forward, maybe Amazon continues from here. But with the loss of momentum, a couple of new squeezes taking place, you're at the 3+ ATR extension. And it's not just Amazon. Google looks a little bit tired, Apple looks tired, Facebook looks tired, and then just the market itself here, you could keep running, we could roll over, we could go sideways, but it's really the fact that you had a daily squeeze, the squeeze fired long, but now you're losing that momentum. And typically once you lose that momentum, with the understanding anything could happen from here, a lot of times the market needs a week to 2 weeks to kind of revert back to the 21, bang around back and forth, but in the midst of all that crap, we do get new squeezes, and the new squeezes can certainly lead to the next leg higher. So that's what we're talking about in Sunday's video. So with Amazon or really anything tech related, here's what you should focus on right now is the new daily squeeze in the Qs. And keep in mind, you still have that weekly squeeze behind us that hasn't quite fired long yet. So with that being said, maybe it's a little bit choppy here for a week or so, but those Bollinger Bands tighten up. We get another positive histogram, a couple lower time frame squeezes on top of the buy zone. That begins to trigger long. We're going to want to have positions in Amazon, Google, etc. So we'll get into more detail about that on Sunday, but that was the Amazon trade. Pretty interesting one, and I do think there's more left on the table, so we'll definitely be focusing on it. But I appreciate you watching. Please enjoy your weekend, and I'll be talking to you tomorrow for Sunday's prep video. Until then, be safe. Before I let you go, actually, let me show you just the screenshots of the orders here. So this is a screenshot of the account. I believe this was on Wednesday. Yeah, this is on Wednesday. It was the day Chandler had his webinar. So good open profits on Wednesday. Thursday was a little bit volatile. Then, had earnings at night into Friday. So for the orders here, right, there's the 3550 by 3540 put credit spread I did. Had 25 contracts. The 3500 by 3490, I had 38 contracts here. Here is the 3450 by 3430. And something I got to take consideration too is instead of doing multiple positions, just put all the capital into one. One note I keep taking this year is my first position is my best, which with the 3500 put credit spread, that was the most profitable one. So had I put the capital into that one and not the rest of them here, would have been a little bit different, but no complaints. And here's the entry for the debit spread. So those are the entries. That was my week. I hope you had a good one. And the next couple of weeks should be pretty interesting.